The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. Thanks very much for tuning in on this Monday. We'll be with you all 5 days this week, Monday through Friday, 3 to 4 Eastern. If you want to give me a call, talk about this market, you can always do that toll free, 877-927-6648, 877-927-6648. Again, the show airs daily on TFNN from 3 to 4 Eastern. You can also get my show on iTunes. If you can't listen live, you can also listen to all TFNN programming. If you are not near your PC, just take out your smartphone, type in tfnn.mobi in your smartphone browser, tfnn.mobi, and you can listen to the stream that way as well. If you want to look at charts that I'm going to be looking at on the program today, index charts, stock charts, charts of the VIX, charts everywhere you look. You can do that on Tiger TV, Channel 1. The show is carried live, and it is archived on Channel 13, and you can also watch Tiger TV with your smartphone as well, so good deal there. All right, checking in on the S&P 500 here. Let's go ahead and refresh the chart. We'll see more gains for the market after a solid session on Friday. We got that better than expected jobs report. 163,000 jobs, that's nowhere near where we need to be, but the fact that it was well ahead of expectations, investors decided to embrace that on Friday. And there's also hope, of course, that more action is coming, not only from the Fed on the home front, but also from the European Central Bank. Perhaps next month going to be buying some more bonds to keep those borrowing costs down for Spain and Italy and some of these other troubled countries. But S&P 500 right now up 8 points, call it 0.6% to 1391. And the Nasdaq Composite is up 1%, so it's outperforming a little bit today, up close to 31 points to 2998. Look at that, exactly 1.2 points away from that 3,000 level. So finally seeing a little breakout for the Nasdaq Composite. Remember, the Dow and the S&P 500 had cleared resistance in recent days. Well, we're finally seeing that happening today with the Nasdaq Composite. This is a classic low volume breakout. The last I checked, volume was very light on the exchanges. We'll check in here real quick. Head over to IBD's website, investors.com, and they have that volume projection at the top of the homepage. Right now, volume on both exchanges tracking about 15% below what we saw on Friday. Remember, on Friday on the New York Stock Exchange, 744 million shares traded hands. Nasdaq volume right around average at 1.7 billion. So a low volume rally today for the market. Not the best of signs. Always want to see conviction behind up days and lack of conviction behind down days. So heavy volume fueling up days for the market and low volume behind down days. But, we're in the summertime, a low volume time for the market. So this rally could still have more legs, there's no doubt about it. Let's check in on the VIX today. Remember the CBOE Volatility Index. This is a kind of a fear indicator in the market. Thursday and Friday, the VIX really fell apart, down 14% in 2 days. Right now, it is up 1.7% to 1590. Still looks like a broken chart to me, so a lot of people saying the VIX is oversold here. Only a matter of time before we get a big bounce. But bottom line is it is under key support levels now. Has been under the 200-day moving average for quite some time, and it is now below the 50-day line as well. So the VIX up a little bit today, trying to come back from 2 really nasty days of selling last week on Thursday and Friday, again, where it lost a total of about 14%. Check in on shares of Knight Capital Group today. Stock has been down sharply last week, Wednesday and Thursday. It bounces back Friday. Today it is down another 21% to $3.19. News over the weekend. and actually earlier today that a group of investors purchased a majority stake in the trading firm for about $400 million. You'd think this would be good news for Knight Capital because it just provides some liquidity, some stability for the stock. But the problem is this purchase. TD Ameritrade, Blackstone Group, Stifel Nicholas, Jefferies Group, a whole consortium of companies, and purchased a majority stake, and it is going to be very dilutive because going into today there were about 95 million shares outstanding for Knight Capital. The buyers are going to get about 267 million shares of the company, so big dilution concerns, and that is why the stock is down sharply today. But it looks like Knight Capital is going to be around. They're going to be saved for the time being. Checking in on shares of Best Buy. Let's see what's going on with Best Buy. This is a stock that obviously has been in a lot of trouble in recent months as investors question the company's ability to grow earnings growing forward. They've been shuttering stores. Certainly the competition from Walmart and Target and Amazon. Best Buy just having a hard time keeping up here, but the stock is up big today, up 13.5% to $20.02. The story here is that the company's founder, Richard Schultz, said that he wants to take the electronics retailer private by buying up the rest of the shares he doesn't already own. Schultz already controls about 20% of the company. Said he's willing to pay between $24 and $26 a share for Best Buy. The fact that it is only trading around $20 a share means that there is some investor skepticism about this, about the possibility of this happening. If this deal values the company between 24 and 26, you'd think it'd be trading a little closer to that price, but only trading around $20 right now, and stock is well off its session high, actually trading in the bottom half of its trading range today. Take a look at shares of Time Warner. Interesting acquisition here. TWX on the New York Stock Exchange. Boy, Time Warner has been an outstanding performer. It's up about 0.9% today to 41.74. Wall Street Journal reported that Time Warner is going to buy Bleacher Report, a sports news site which focuses more or less on the entertainment side of sports. It's going to buy Bleacher Report for about $175 million. So that's news on Time Warner today. Taking a look at crude oil. Crude for September delivery added 80 cents, 0.9%, settled at $92.20 an ounce. Crude oil has been rallying back. I think that 92.20 is probably the highest close in about 2 weeks, maybe a little more than 2 weeks. But taking a look at the United States Oil Fund, USO, it is up 1%. To 34.41. Reclaimed its 50-day moving average back in July last month. It is holding above this support level and actually approaching a prior resistance level here just underneath 35. So are we going to see higher oil prices down the line? That remains to be seen. But crude oil higher again today. Taking a look at the GLD, Spider Gold Trust, this ETF, which trades at about 1/10 the price of an ounce of gold. It is up 94 cents today, 0.6% to 156.49. Gold for December delivery rose $6.90 today, 0.4%, closed at $1,616.20 an ounce. The GLD also last month climbs back above its 50-day moving average, trying to find support there. 200-day line at around 160, 161. Looks like it could be a pretty good ceiling for the GLD. Could be a good resistance area. So gold, GLD trying to find a bottom here, higher for the second session in a row. Let's take a look at Goldcorp here. I actually have saved a chart of Goldcorp. Right now the stock is up 1.8% to 36.62. Let's check in on the chart. We'll see that Goldcorp today is trying to get a little jiggy here. You can see it's a descending trend line I drew connecting the recent highs for the stock. It's really right at that ceiling here, trying to break out. It has not yet, so we'll keep an eye on some of these gold miners in incoming days. But Goldcorp still sitting underneath resistance here, but up 1.7% today to 36.60. U.S. dollar index recently trading around 82.24, down 14 ticks, below its 50-day moving average at 82.68. Let's check in on the U.S. dollar index here. It has given up its 50-day moving average, so stock market bulls are probably happy to see that. This is the UUP. Let me go ahead and pull up the... There it is. This is the dollar index as of Friday's close. You see Friday, it was down 1.2%, closed underneath its 50-day moving average, and it's down a little bit more today. Like I said, 82.24 last on the U.S. dollar index. 50-day moving average at 82.68, and it is now around 82.24. So does this mean that the U.S. dollar index is finally ready to kind of pause and consolidate gains? Perhaps we see more weakness for the U.S. dollar. Does that bring more money in from the sidelines? It's a definitely a strong possibility. Taking a look at bonds today as well, and the TLT is given back its gains. It hit an intraday high of 128.14. This is an ETF that tracks the long end of the long bond. It hit an intraday high of 128.14. It is now trading at its session low, trying to hold its 50-day moving average here. It'll be interesting to see if TLT eventually breaks below the 50-day line. If that happens, the dollar weakens. You would think that additional money could flow into the stock market. We'll see how that all shakes out. Very quiet this week in terms of economic data. Tomorrow we've got consumer credit. I don't really follow that too closely. After that, Thursday, we've got weekly jobless claims, the trade balance for June, wholesale inventories also for June, and Friday, import-export prices, the Treasury budget. So really not much in the way of market-moving headlines. I think weekly jobless claims would trump all of the other economic data on tap this week, and even that is not all that exciting, frankly. But earnings reports, we'll get into those in just a little bit. Taking a look at earnings that the market is digesting today. Cognizant Technology Solutions, a provider of IT consulting, technology, outsourcing services. Nice day for Cognizant. This is a stock that has just been obliterated. Not a technical breakout here. Still trading underneath its 200-day moving average. It's been kind of firming up between the the $56 and $60 area, but a nice move for Cognizant today, up about 11.8% to 64.67. Earnings were up 22% from a year ago to 88 cents a share. Revenues up 21% to 1.8 billion. So decent forecast from the company. Sales from Cognizant's financial services and healthcare businesses rose 20 and 25% respectively. So all in all, a earnings report that did surprise the market quite a bit, and shares gapped up as a result. I would still consider this a broken stock, not a stock that would fit my buying criteria for the Ultimate Growth Stocks model portfolio. If you want to check out 30 days free of Ultimate Growth Stocks, just go to kenshreve.com. That'll take you to my TFNN info page. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pensamentos, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. DirectionShares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the DirectionShares carefully before investing. The prospectus and summary prospectus contain this and other information about DirectionShares. To obtain a prospectus or summary prospectus, please contact DirectionShares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Let's check in on shares of LinkedIn, LNKD. Remember, last week on Friday, investors responded very positively to the company's second quarter earnings report. LinkedIn is just one of really a handful of IPOs that are continuing to show strength in this market. We'll take a look at Zillow as well, ticker Z, which is going to be coming out with earnings later this week. But it's no surprise. It's not surprising at all that LinkedIn is delivered the earnings report that it did on Friday. Their revenues were up 89% year over year to about $228 million. Earnings were up 45% to 16 cents a share. Strong outlook. Company is executing nicely. Despite a 16% move for the stock on Friday, it had not broken out yet. But today it is finally breaking out. Cleared a swing point of 109.90, and at 112.58. Probably not even extended here. So big gain for the stock over the past two trading sessions. But if you look at the context of the swing point that it broke out over, 109.90, the fact that it's only $3 above that swing point is, it has not left the station here. I think LinkedIn is still interesting company here. The question is, is this market uptrend sustainable? We didn't really have volume in the market today. Is very light. The action in technical breakouts has been good in some cases, and in other cases not very good. But LinkedIn is certainly acting well today, up another 3 3/4% to 112.58. Taking a look at shares of Drillquip. This is another company that came out with earnings earlier today. Drillquip is a offshore drilling equipment manufacturer. They specialize deep sea drilling, harsher environments. Drillquip up 2.5%. to 73.85. Let's take a look at a weekly chart for Drillquip, and we'll see that this is a company that could be on the verge of a little breakout here, still trading below resistance, right around 77.5, but working on the right side of a base. Doesn't look too badly here, but despite a big day for the stock today, and it's moved nicely off its lows around $60 a share, still has not broken out of this base. So a good one to keep your eye on here, because technical breakout has not happened yet. In a technical structure like this, it's not uncommon to as the stock approaches its former high on the left side of the base, sometimes it'll come up and then it will just kind of pull back a little bit, form a little handle area, and then that is what sets the stage for a possible heavy volume breakout. So Drillquip having a good day today, and its base doesn't look too bad at all. Other notable movers today, let's check in on Michael Kors. The luxury brand is expected to, they will be out with earnings on August 14th, not that far away. 20 cents a share is what is expected. Sales up 51% to $368 million. Stock is outperforming nicely today, and some pretty decent volume. It's up 4.3% to $42.95. This is still a tough one to play, because it's working on a real big base here. You've got you've got a resistance level here just underneath 45. It's still about $2 underneath that prior high. So I'm not going to do anything with this one. It does have a lot of characteristics I like to see in a stock. It's an innovator. It's growing the bottom line and top line nicely, and it's a new company, so it's got a lot going for it. But it is still a high multiple stock that possibly could still be somewhat vulnerable in this type of market environment. Plus the fact it's not breaking out of a base yet. It's still working on a base, and we just want to kind of make this stock prove itself a little bit more. Speaking of breakouts, we'll check in on shares of Apple. I am long Apple in the Ultimate Growth Stocks model portfolio. It did finally break out over resistance today around 620. It is up 1.3% to 623.78. The issue with Apple is it's really still not showing anything in the way of accumulation. Just a lot of low volume moves here. It's not clear to me that funds are excited about buying the stock. They have not been buying it recently. In fact, you did have some pretty serious distribution in the stock when it reported earnings recently. But you do have a breakout today, and the breakout over 620 is noteworthy. Just wish there was a little more volume in Apple today. That is not the case. Priceline coming out with earnings tomorrow. This is another former leader. I'm not convinced this one is going to have the ability to lead going forward. Shares of Priceline off its high today, down 23 cents to 663.76. Earnings after the close. Market cap of $33 billion here, still delivering very strong bottom line and top line growth, but Europe could be an issue here, so we'll be listening to what Priceline has to say tomorrow after the close. All right, headed into the next break, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pensamentos' new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by DirectionShares. To learn more about tactical tools for the sophisticated active investor, hit the DirectionShares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN with a little less than half hour left to go in Monday's session. We'll check in on the markets here. Dow and S&P 500 lagging the Nasdaq Composite a little bit, but still a decent day. Low volume gains for the market today. I mentioned at the top of the show that volume on the New York Stock Exchange and Nasdaq tracking lower than what we saw on Friday, and Friday's levels were basically average. My general take on the market is, I'm absolutely encouraged by the fact that the Dow and S&P 500, for example, are closing in on their April and May highs. I'm very encouraged by that. I'm encouraged by the fact that the Dow and the S&P 500 recently broke out over resistance. I'm also encouraged by the fact that there have been some breakouts to work with in this market. All that said, it's not clear to me that there's accumulation going on in the market. there's still a lot of money on the sidelines. Still a lot of money on the sidelines, hesitant to come into this market. When I talk about accumulation in the Nasdaq, I mean, it really would be nice at some point to see a 2 billion plus share up day for the Nasdaq. On the NYSE, NYSE doesn't trade nearly as much volume as the Nasdaq Composite, but on the NYSE, it would be nice to see a 1 billion plus share day on an up day for the New York Stock Exchange indices. So we're getting these modest signs of strength in the market. We're seeing some follow through, which is good, and we're seeing some breakouts as well. But it's the foundation is good, but it's not great. It's good, but it's not great. Remember, we've had a bunch of leaders roll over here. The Pricelines, the Chipotles, the Intuitive Surgicals, a lot of these big Nasdaq 100 firms have rolled over. I think that's eventually going to usher in new leadership. But you've probably been hearing comments lately about market breadth maybe not as good as it should be if the market really is as strong as it's trying to convince us it is. So overall, not bad. Believe me, I like to see up days for the market. I like to see green days. I would like to see a little more accumulation. Would like to see more signs that funds and other institutional investors are coming into this market. They're certainly not doing it today with volume as light as it is on the New York Stock Exchange and Nasdaq, but some decent movers out there. Let's take a look at FEI company. That's ticker FEIC. This is a company, interesting business, kind of a niche business here. They supply scientific instruments for nanoscale applications in material sciences, life sciences, chip industry, data storage, but nice follow through today for FEI company. Big breakout for FEIC on Friday. It's up another 3% today to 54.09. When you see these heavy volume breakouts, if I see a chart that looks like this, I say, okay, this is interesting. This is a stock that is clearly under accumulation. And let's swing over, take a look at its weekly chart here. FEI. Oh, do I not have FEI? Oh well, no big deal. So we see a strong breakout over 52 bucks a share. Again, this one still could be in the early stages of a move, but when you start looking at growth prospects, okay, is this company growing earnings and sales rapidly? What do growth prospects look like? And the one thing I noticed with FEI company is that sales growth is decelerating in recent quarters. So in their latest earnings report, their revenues were only up 5% to $221 million. Now, growth prospects this year and next, it's going to be a 15-20% grower, which is completely respectable, and it's got plenty of other positive qualities. But decelerating sales growth in recent quarters is more often than not a deal breaker for me. So I have to be very picky when you're buying heavy volume breakouts. You want to make sure you're dealing with a company whose fundamental story is interesting enough, and it sort of jives with the technicals. There's no doubt that FEI company is under accumulation here. There's no question about that, and it is a good, strong technical breakout. But it was such a huge move Friday. I thought it was a bit of a risky buy, even though it was just in the early stages of a breakout. But the fact that sales growth has been decelerating in recent quarters is what kept me away from the stock. Another name that broke out recently, seeing some follow through today, an India bank called HDFC Bank. That's ticker HDB, Harry David Boy, on the New York Stock Exchange. After early strength, it is now down a penny to $35.99. HDB had a breakout over Friday. Over $35 a share. I think that was the swing point. Again, this is ticker HDB. Little cup with handle pattern. Here was the swing point right here, 35 bucks a share. Another stock that's under accumulation here, and good growth prospects. So I like this one. Probably fundamentals are okay, and their latest quarter sales were only up 7% to 1.7 billion. Earnings up 3%, but it is under accumulation, and sales growth has been slowing down a little bit here as well. But it is a financial that is breaking out in heavy volume, and if you're looking in the financial space, this is probably one of the better houses on the block, so to speak. So HDB looking pretty good, and I also have a chart here, monthly chart of HDFC Bank, and you can see this trend line I drew. This is a monthly chart now, okay, so it's a much longer time frame here, but you can see if the stock remains under accumulation, not out of the question here that you see this sideways movement. This one could try to really stage a meaningful upside breakout here, especially if the financials continue to make progress here. So HDB, interesting. Let's also take a look at ResMed. This is a company that deals in sleep apnea, breathing disorder while you're sleeping. It has reversed after early strength, but a big breakout for the stock Friday. Today it hit an intraday high of 35.93, now trading around 35.34, down about 0.9%. So, but one that's still within buying range. It's it's a good solid breakout. I think I have a weekly. Let me see here. Every time I go and check and see if I have these things. ResMed, no, I don't have a weekly for ResMed either. But good solid breakout over a swing point of 35. Interesting company here. Volume on Friday told me that the stock was clearly under accumulation. I think I mentioned that there's a pretty high short interest in ResMed, so a lot of shorts were covering on Friday, no doubt about it. But again, you look at growth. It's sales growth in the second quarter. They just announced earnings up 9% to 372 million. So really, when I'm looking at recent earnings and sales growth in a company, I really want to see as strong as growth as possible. It's not to say that I will never buy a stock where sales growth is 5-10% in the latest quarter, but the faster the growth, the faster the top line growth, the better. So typically I'm looking in that 20, 25, 30, 40, 50% area, not only in sales growth but also earnings growth as well. So some breakouts recently that reveal stocks under accumulation, but fundamentals are just coming up just a little bit short. Here's a new name that came up on my radar today. Interesting company here, RealPage, ticker RP on the New York Stock Exchange. You can see a little breakout here. Shares up 2.5% to 24.62. RealPage is interesting. They reported nice earnings last week. Earnings up 22% to 11 cents a share. Sales up 28% to 78.8 million. So there's that quarterly growth I like to see. Stock breaks out over a swing point Friday, right around 23.25. This one is still within range as well. Not talking about dealing with an extended stock here. This is a company that provides on-demand software solutions, so cloud computing for the rental housing industry in North America. With all this talk about the housing market that is showing signs of life, listen, we know people are gravitating towards rentals. And so that is good news for RealPage. Again, they provide on-demand software solutions for the rental housing industry in North America, basically property management systems. But interesting company here. I hadn't heard of it, just started doing a little work on it today. Growth prospects very strong here. This is another thing you want to look at when you're evaluating a stock. Okay, you see good earnings and sales growth in recent quarters. What does annual earnings growth look like? Does it have a consistent track record of growth in over the past 3 to 5 years? What is Thomson Reuters looking at for growth this year and next year? And the annual earnings estimates for RealPage are looking for minimum 30% growth this year and next. So high multiple stock, but the reason it has a high multiple is because of bright growth prospects. So another name under accumulation here, A little bit speculative. I mean, whether or not you would call this an institutional quality stock, probably not. It's got a market cap of 1.8 billion, average daily volume of about 350,000 shares. But the little amount of work I've done here tells me this company's got pretty good potential here, and could still be in the early stages of a move. Pretty busy week of IPOs. I don't have charts here because they're not trading yet, but these three companies are set to come public this week. How about Bloomin' Brands? That's going to be ticker BLMN. Bloomin' Brands. You've heard of the Bloomin' Onion? Yep, Outback Steakhouse. That's the company that is coming public. They plan to raise $300 million by offering 21.4 million shares. Proposed price range of $13 to $15 a share. Another fast food chain coming out here. CKE. They operate more than 3,000 restaurants under the Carl's Jr. and Hardee's brands. They're going to offer 13.3 million shares at a proposed range of 14 to 16. And then another interesting one here, Manchester United. Manchester United, ticker MANU. Well-known soccer club in the UK. They plan to raise $300 million by offering 16.7 million shares at a price range of 16 to 20. So three IPOs on tap for this week. We'll keep an eye, and I'll keep you updated on those as they start trading. Take a look at network testing equipment maker Ixia. I think that's how you pronounce that name. The ticker is easy enough, XXIA. New CEO in place here since May, and stock that's trading pretty well after a big gap up last week on nice earnings, holding gains nicely. This is one where I would really like to see it kind of move sideways from here. You get a big gap up on this day right here. If a stock can hold gains and move sideways, maybe between 14.5 and 16 bucks a share, you get a little flat base that forms, and just a period of time where the stock pauses and digests gains that can often present another buying opportunity. So Ixia looking good after a pretty nice earnings report recently. This is another small cap stock. Average daily volume of around 400,000 shares, market cap of 1.1 billion. Nice acceleration in sales growth. Remember, we're talking about decelerating sales growth or accelerating sales growth. And in the second quarter, sales growth at Ixia accelerated nicely, up 34% from a year ago to 92.3 million. Earnings up 125% to 18 cents a share. Another company that should be able to grow annual earnings by about 25% or so this year and next. And so, interesting company, maker of network testing equipment that probably not a whole lot of people have heard of. Impacts. Take a look at Impacts. This is IPXL, a generic drug maker. This one has moved a lot off its recent low of 20 bucks a share. It's up another 3.2% today to $23.93. Another small cap here, $1.6 billion market cap. Interesting setup taking shape here. Not a stock that is buyable. I think I have a weekly chart here, but this is a good one for the watch list here. Let's get Impacts Laboratories. Yeah, and you can see here the right side of the base that is forming. Stock hit hit a high earlier this year, came down, corrected in price. This is what is known as forming the right side of a base. So it's getting closer to this recent high of 25.26. It's right around 24 bucks a share right now. Question is, will this one be able to complete a proper base? Still too early to say. It's just in the process of building a base, and if it can complete the base, could take another week or two. You could get. This is an interesting candidate because, again, fundamentals are strong and technicals are strong as well. This is a company that delivered 32% sales growth in its second quarter, and earnings were up 216% from a year ago. So Impax Labs, another small cap name here that looking to, getting a little jiggy here. So another good one for the watch list. If we still are in the early stages of a rally, remember it's going to take weeks for the leaders to come out. Just keep paying attention, look for the bases that are being built, and look for breakouts as well. Coming right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pensamentos, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. You know, it occurs to me last week, very late in Friday's show, there was a call that I couldn't get to from New Hampshire, and I forgot who made the call, but there was a question about Dunkin' Donuts. So I just wanted to talk a little bit about Dunkin' Donuts. Dunkin' Brands is the company name, DNKN, on the Nasdaq. Right now, stock's up 13 cents. 0.4% to $30 a share. A lot of selling in Dunkin' Brands recently. The company not that long ago reported earnings, and you can see it's big break below the 50-day moving average here in heavy volume. It is trying to firm up at its 200-day moving average. What I'm seeing in Dunkin' Brands is quite a bit of institutional selling, so it's not a stock that is really on my radar. Excuse me. This used to be a holding in the Ultimate Growth Stocks model portfolio, and I closed the position in late June, right around $34. I was in at 32, out at 34, just scalped a couple of points of profit in this name. Because I just started to think that the stock was not acting right. So again, back in late June, and you know, we're talking right in this area right here. If you're watching on Tiger TV, is where I cut the stock loose. But it's been, it's a stock that is damaged at this point. So Dunkin' Brands is going to have to, I'm going to have to see renewed signs of institutional buying in Dunkin' Brands. I'm going to have to see a base form here. There are some traders that are probably going to, could think, well, it's finding support so far at its 200-day moving average. You've got a low-risk entry point here. I suppose that could be true, but that's not really how I go about buying stocks for the Ultimate Growth Stocks model portfolio. I like to buy stocks when they've formed bases, where they've consolidated gains for a period of time. They've showed tight closes in their weekly chart. They're showing support. They're under accumulation. Dunkin' Brands is not under accumulation at this point. In fact, it's under distribution. A lot of people still believe in the company's growth story, but I'm taking a pass on this one for now. And again, it's a former holding in the Ultimate Growth Stocks model portfolio, but took a couple points of profit in it. If I buy a stock and it starts to not act right, I typically don't have much patience for it. If I start to see signs that big guns are selling, I will generally sell first and ask questions later. So that's my general take on Dunkin' Brands. Let's check in on CF Industries ahead of its earnings report after the close today. The FERTs have been doing okay here. CF Industries is arguably one of the higher quality fertilizer names out there. It has rallied off its lows. It's up near its session high right now, only up 60 cents, 0.3% to 202.62. And we see that CF Industries is not that far from a swing point of 208.43. Little cup with handle pattern forming here. Question is, what are the results going to look like? Earnings should be up about 30%. Don't have the EPS here, but sales, I believe, up 10% or so to $1.35 billion. I think that's the number. Also, after the close today, Time Warner Telecom, TWTC. Time Warner and Time Warner Telecom have actually been some nice performers in the market here. Time Warner Telecom is underneath its 50-day moving average at this point, but it'll be out with earnings after the close. The stock is up a penny right now to 24.38, and a couple of energy names as well. CXO, Concho Resources. Boy, I remember when this stock was going gangbusters. It's been under a bunch of selling pressure with a lot of other energy names. Concho Resources up 56 cents ahead of its earnings report after the close to 89.33. Another broken stock here. Pretty significant resistance at its 200-day moving average at 96.52. Tomorrow, Beacon Roofing Supply, Priceline, Vitamin Shop, Zillow. Still some interesting earnings reports coming up, folks. We'll talk about them tomorrow on Breakout Investing at 3. Coming up next, the Tom O'Brien Show. Have a great afternoon.